Companies focusing on regional expansion, needing the capital to do just that, and turning to the equity space in turn.
Yeah, I think, as you say, in terms of timing, obviously with the global financial crisis, 2008, 2009, we saw a slowdown in terms of companies coming to the markets to raise capital. But I think this year we're certainly expecting to see that picking up. The investors are a bit more risk, or a bit less risk averse, and there is a lot of cheap capital looking for a home. So I think from both ends, we'll see investors coming into the market because the market conditions are more suitable for them to raise capital, and we'll see money coming in from investors because they, as I said, they're looking for yield.
Do you see that tipping the scales enough, though? Because, I mean, we've been reading ongoing commentary about the fact that we're seeing outflows from emerging markets, from African markets, and back into the developed market space at this stage, where valuations are looking pretty hefty on the emerging market front. Do you see that at all posing a bit of a challenge to this in terms of timing?
I think maybe in the short term, obviously events in Egypt and Côte d'Ivoire have had an impact. But I think you also find, because there's such a limited number of investment opportunities, particularly in the frontier markets, not so much the emerging markets, but Africa's frontier markets. I think you will still see investors keen to actually get some exposure there. So maybe in terms of the prices that these new companies list at, the valuations will be a lot cheaper than, say, the existing listed stocks.
Well, let's take a look at some of those that are on the radar screens. And looking at Kenya, there are quite a few listings that are being anticipated in that territory. British American Kenya is one of them, and that's a holding company for 2 insurance firms and an asset management business. What's your take on that company as a whole?
I think, looking at Kenya specifically, a lot of the, with the growth that Kenya has seen over the past couple of years, a lot of companies are looking to now expand into the region. We've seen Kenya Commercial Bank going into the region. Southern Sudan has just come on track as a new country that will be an investment opportunity for these firms. So I think BAT, or British America Kenya, is looking to tap into that growth story.
We've often questioned the investment merit of insurance firms on the continent, though. Given the fact that business of insurance is not that big at the moment. I mean, what do you see being the investment merit in an insurance firm on the continent? And I ask because it's not only British American Kenya that's looking to go down this route. We've got Cooperative Insurance Company, which is looking at listing as well, but in 2013. South Africa's Liberty Holdings expects to list its Kenyan insurer CFC Holdings Insurance as well.
I think you're right, but I think therein lies the investment case. The insurance penetration levels across Africa are so low that I think these companies are looking to build scale. So where perhaps in their local markets take up isn't that high, perhaps if they can spread their capital across the region, they can then sort of start reaching, getting to the economies of scale that'll allow them to actually do well. So it's a challenge. Insurance is not a popular sort of tool for a lot of the African,
certainly not as popular as the banking segment has become. I mean, the big one over in Kenya is the government's hiving off a 51% stake in the country's 9th largest bank by assets, and that being National Bank of Kenya. This seems to be have been caught up in quite hefty delays, though. I mean, what's the problem there? How soon can we anticipate this actually coming to fruition?
I guess with anything that involves the state, there'll always be a few issues. So I don't think it's anything fundamentally wrong. Perhaps it was a timing issue again. They were looking at when they think they can get the best price and when they can then offload that. So with the Kenyan market having done very well last year, and seemingly going to do the same in 2011, I think maybe it was just a question of timing.
Well, staying in East Africa, Rwanda saw its first IPO with Brileroy, the first of many being anticipated, where we've got the government looking to hive off a 10% stake that it has in MTN Rwanda, 20% stake in the country's biggest insurer, Sanarwa, as well. To what extent has the signing of the East African Common Market Protocol played a role in encouraging these premier listings? Because it seems to have stimulated something.
Yeah, and I think going, maybe not at as high level as that, but the East African community itself has been pushing to have an East African stock exchange. So Rwanda was well behind Kenya and Uganda in this regard. So they they've now switched from being an OTC market to a fully fledged stock exchange effective 1 Feb with the listing of Bralira. And I think especially with Rwanda, they're trying to push themselves into being a financial services center for the region. They, very, very technologically advanced. That's their drive. So I think we would expect Rwanda to be pushing more listings.
Of course, we've got South African-based MTN Group holding a 55% stake in MTN Rwanda's operation. As I mentioned earlier, Liberty Holdings has its vested interests with CFC Insurance Holdings as well. To what extent do regional listing plans affect share price movement and investor sentiment here on home ground in South Africa, if at all?
I don't think by much. Generally, you find a lot of these listings for multinationals, including those from South Africa, are more as a way of involving the local investors as opposed to actually raising capital. So, the impact on the local share prices generally isn't that great because they're not actually raising money for expansion or whatever it might be.
Well, what are you anticipating in terms of local investor sentiment then? Because, I mean, in Zambia, we've got Vedanta potentially looking at a secondary listing on the LUSC. We've got Botswana Diamond set to join the London Bourse AIM, but it also has plans for a secondary listing on the Botswana Stock Exchange. And many question the merit of these secondary listings in the first place, because often investors go for the most liquid, and so attention naturally diverts to the bigger markets.
That's correct, but I think, as you say, from the perspective of local investors, we might not be able to actually access the offshore listings. It still makes sense if it's bringing more liquidity to the local exchange. I think that's still a positive thing. And you find at times they do limit the number of shares that can be moved offshore or coming in, or that have to trade on the local exchange. So whilst international investors may then choose not to actually buy the shares locally, but I think for local investors it's definitely
And do you get a sense that we're seeing some kind of ramping up and an improving sentiment amongst local investors on the continent itself?
Yes, certainly. I think in Kenya especially we've seen the retail investors have come back quite well this year.